Draft Non-Domestic Rating, Levy and Safety Net Amendment Regulations 2025.
Call the Minister to move the motion.
Thank you, Chair. It's a pleasure to serve under your chairmanship. I beg to move that the committee has considered Non-Domestic Rating, Levy and Safety Net Amendment Regulations 2025. This government is working to fix broken foundations that have left councils of all political stripes in crisis, and as a result will put them on a more secure financial footing. Not least, as we've already set out the objectives and principles on which we'll reform the local government finance system, and we've held an open consultation on them. However, as we work to rebuild local government, we must also keep delivering now to ensure that councils have certainty that they need to set budgets and carry on providing essential services. The business rate retention system is a well-established part of the local government finance system. It allows councils in England to keep a fixed proportion of the business rates that they raise locally, and hence to benefit from increases in business rate income in their local areas. The system is, therefore, underpinned by principles that are straightforward, yet it operates via a series of necessarily complex administrative arrangements between councils themselves and between local and central government. These arrangements are governed by secondary legislation, which must be regularly updated for the system to carry on running in the way that it was intended to, and so councils receive what they're entitled to. The amendment regulations before the committee this evening make the updates which are necessary for this year, and while the changes are technical, the reasons for them are simple. I'll explain them now in order. 7 principal sets of regulation govern the business rate retention system, and the amendment regulations before the committee today make changes to one of them, the Levy and Safety Net regulations. The regulations describe how councils are protected from significant falls in their business rates income via a safety net, and how, in part, this is paid for via a levy on the growth in their business rate income. 3 changes are needed to the regulations this year. All affect the calculation of the measure of income, known as the retained rates income, against which we calculate the eligibility of the safety net or the requirement to pay a levy. Firstly, we adjust this measure of income to continue taking into account authorities which have a higher level of retention. This is something that we do each year. Under the rates retention system, there are a number of councils which, in 25-26, as in previous years, will retain more than 50% of growth in their business rate income. In other words, they benefit from enhanced rate retention arrangements. It is important in performing the levy and safety net calculations that the calculation is made at the normal or 50% rates retention level for all councils. This ensures that where there are additional safety net arrangements for those councils with enhanced retention arrangements, this does not disadvantage councils who run at the 50% level. The regulations do this by adjusting the figures set out in the local government finance report for each council with enhanced retention arrangements to do what would have been done with councils operating at 50% rates retention. Secondly, each year we also amend the regulations to mitigate the impact that changes in the underlying tax have on the rates retention system. This year we need to adjust authorities' income for 2 reliefs, supporting small businesses relief and the retail, hospitality and leisure relief. As such, these regulations will make sure that major precepting authorities, generally county councils and fire authorities, are not doubly compensated through the levy and safety net for a reduction in business rate income resulting from rewarding these funded business rate reliefs. After precepting authorities will be compensated via a grant for this loss. However, the grant is not automatically accounted for in their retained rates income. This income would therefore appear lower than the amount they have in year, which would affect the accuracy of the levy and safety net calculations. The amendment regulations add back the value of compensation for the new business rate retention relief to major precepting authorities' retained rates income. This ensures that the compensation is taken into account and therefore a more accurate measure of each council's income is used to calculate the levy and safety net payments. Finally, these regulations correct a figure used to calculate the amount of small business rate relief compensation to add back to Northamptonshire's retained rates income for the purpose of levy and safety net calculations. An error was made in the non-domestic rating, levy and safety net amendment regulations 2022 following the set-up of the council in 2021. A figure of 67.4% was included rather than the correct figure of 67.8%. Following the recent discovery of this error, we're taking the first opportunity to rectify it. Several aspects of the rate retention system relies on council submitting their certified or audited data. We use this data to make calculations, including the levy and safety net calculations. Where such data is outstanding, we make an interim calculation to ensure that no council loses out or is required for future payments of a levy, because it is waiting for accounts to be audited. This is the case for Northamptonshire, whose interim calculations were in fact based on the intended 67.8% figure. However, now that we've discovered this error, we must correct it. The rectification of this error will not affect the council's requirement to pay levy or its eligibility for the safety net for 21, 22 or 22-23. This is because Northamptonshire is not required to pay any levy, nor is it eligible for any safety net for those years, a situation which this rectified figure will not change. However, the council will pay a levy from 2023-24 following the impact of the 2023 revaluation of business rates. So in changing this figure, it will have an impact on the amount of levy paid going forward. The amendment ensures that this levy will be calculated on the correct basis, and my officials have notified the council of this change. To conclude, these technical regulations make several important updates to the administration of the business rate retention system, and if passed, will mean that councils receive the business rates income that they were expecting to, and thus have budgeted for, and I commend it to the committee.
Thank you. The question is that the committee has considered the draft non-domestic rating levy and safety net amendment regulations 2025. David Simmons.
Thank you, Mr. Chairman. It's a pleasure to serve this evening under your chairmanship on a matter which I know clearly rivets the attention of all members of the committee. The Minister in his introduction made reference to fixing foundations. I think it is important for the committee to note that the decision which we are asked to take this evening reflects the work and the policy of the previous government as introduced in 2013-2014, which set a direction of travel on business rates, whereby a greater proportion of the growth which was created at local authority level would be retained at local level. It's a principle which I know there's been a high degree of cross-party agreement on for many years, that those places which put the work in, that see the local impact of growth, should also benefit from that financially. And whilst I think we'd all accept that it was a work in progress at the time of the last general election, I'm pleased that the government is at least continuing to operate the same system, and I hope the Minister will consider how the principles that underlie this decision-making can be rolled out further in future. And business rates retention essentially is about saying to local authorities that rather than acting purely as a collections authority for central government, that a proportion of the money which they collect through that non-domestic rates process will be retained locally. And it's part of an infrastructure which included the pooling arrangements introduced under the previous government, which were designed to ensure that that benefit was not seen solely by an individual local authority, but because often significant business growth has a wider regional impact, was able to be shared across groups of local authorities. And if we look at London, for example, there are a number of pooling arrangements in place whereby local authorities share some of those proceeds across a wider area. Now, the Minister has set out in his introduction the impact and the purpose of going through the arrangements for top-up and tariff authorities. But I have two questions which I would like him to consider perhaps in his summing up. The first is that although the figure itself is very small, this committee paper involves an amendment to a previous set of measures that were introduced in a round of local government reorganisation following the abolition of Northamptonshire County Council and its constituent districts, to introduce the new North Northamptonshire and South Northamptonshire local authorities. And it would be helpful to understand that given, although the impact in this case is small, that the government will be giving a good deal of consideration to ensure that as the process of local government reorganisation, which has been outlined by the Minister and colleagues, takes effect, that all of those possible calculations and impacts have been fully considered, because we know from previous rounds of local government reorganisation, and not just the one referenced here, that that can be a significant impact on the administration of that local authority subsequent to elections. And the second question I'd just like the Minister to briefly address. I think we understand from the explanatory notes that the impact of this is negligible when it comes to the budgets of individual local authorities. However, I think it is noteworthy that most local authorities will have already completed their budget setting process in the last few weeks. And I think it would be remiss of me, having served many years as the Minister did in local government, to not flag that whilst it is the case that this instrument takes effect immediately once it is passed effect, comes into effect tomorrow, it is the case that it would be good practice to ensure that local authorities have all the information before them when they make a decision. And given that business rate variations can potentially have very significant impacts on local authorities, especially if there are changes to pooling or that a local authority finds itself in a switch from a top-up to tariff authority or the other way round. All of those are things which would normally be taken into account in the budget setting process, of which the non-domestic rates are by statute part. So it would be helpful if the Minister would perhaps be able to give the committee some assurance that the department would work in future to ensure that where there are instruments like this which would have an impact, that those decisions are taken so they can legally form part of the council budget fixing rather than being passed by Parliament, although it is legal for it to do so, after those budgetary decisions on which they have a bearing have already been taken.
Thank you. Minister.
Thank you, Chair. And can I thank the opposition spokesperson for his usual constructive response. I think on matters of the structural reform, there is agreement actually that far better that local government has long-term security, has stability, and as much as is possible that we really tie down tax that is raised at a local level with the local accountability that comes with it, and that's as important for council taxpayers as it is important for the local business community. We also recognise, of course, that the groundwork that was done on devolution has a business rate retention scheme hardwired into it. There were many devolution agreements where their financial construct was based in large part on the business rate retention scheme being able to better reflect that when areas come together and they organise for growth, that they ought to benefit from the proceeds of that growth. And so the business rate retention system that is in place has been built up over a period of time, and I would say has maintained cross-party support on the basis of that. As I say, these are generally very technical measures, but I take the point completely that local authorities need notice to be able to prepare. I would say that most local authorities will be preparing on the basis of the information that's coming. It will not be a surprise to them. And I can give assurance that in the case of Northamptonshire, that officials have been in contact on a regular basis with that local authority to let them know the adjustment that's coming so that they can prepare the ground. So hopefully that gives him comfort. On the points made about local government reorganisation, clearly we're at a point now where the statutory invitations have been sent out to the remaining 21 counties. I would say that interest has been high, and we expect all or maybe the vast majority to submit some kind of proposals as part of that process. We fully accept that that will require a significant amount of resourcing both from the department and local government itself, and we also recognise that in bringing together a range of different funding streams for councils at different layers of government, different geographies around the country, that we are going to have to do that piece of work to make sure that the alignment of assets, liabilities, revenue, etc. Is taken into account. And I can assure them that officials are working on that. It would be naive for me to say that I could absolutely guarantee today that there will never be an error. You know, the fact that we're here to reconcile an error that was made previously says sometimes in very complex calculations that can happen. But I can say that best endeavours that we're doing all we can to make sure that we work that through the system. And I'm very happy if it helps to arrange a technical briefing with officials about how we're gearing up for that, if he finds that useful.
Would the Minister give way on that point?
Of course.
I'm very grateful, Mr Chairman, for the Minister's offer. I'm sure we'll take him up on that. Can he give the committee an assurance that such technical programmes are encompassing all of those government departments that have a direct stake in local government? For example, I would highlight that previous reorganisations have sometimes resulted in SEND school facilities being entirely within one of the resultant local authorities, with the other then having a significant general fund revenue cost, which would be visible in MHCLG, transporting children across border to access those schools that have in fact always been the traditional schools available in that county. But it can have a significant financial impact, and it would be good to know that those kinds of measures are being considered fully across government.
Yeah, I mean, I share his observation. about the complexity of a system, and it only takes a small part of it to throw actually quite wild numbers out in different parts of the country, because there's a lot of commonality in local government, but actually different types of councils are affected very differently by different elements of public service pressures. County councils in particular affected far more on home to school transport, for instance, than maybe more urban areas. So I completely understand that point. I will say we are eyes wide open as to the amount of change that's gone through the system. So just on business rates, we've got the business rate reset, we've got the business rate relief work that's being done in terms of retail, hospitality and leisure. We've got the revaluation that's taken place at the same time. We've then got a number of devolution agreements that are coming, where I'm sure retention will form part of those discussions and negotiations that are taking place. And on top of that, we've got the more fundamental review of local government finance, where the funding formula is being looked at again. So there's quite a lot of change in the system that I am very alive to. They need to make sure, one, that the data is accurate, it's up to date, and also that we take local government expenditure in the round to make sure that in the end every council has the resources that are needed on a fair basis to deliver decent public services. So we are on with the political work in terms of the outcome, but also the technical work in terms of the process to make sure that it is robust. So, Chair, in conclusion, these technical amendment regulations are required to make sure the business rate retention system operates as it should, and I hope the committee will join with me in supporting them, and I beg to move.
Thank you. The question is that the committee has considered the draft non-domestic rating levy and safety net amendment regulations 2025. As many as are of that opinion say aye.
Aye.
Of the contrary, no. I think the ayes have it. The ayes have it.